Welcome to RAM Time Machine, where we predict the future of India's markets in 2025. Brace yourselves for some shocking revelations. It's like looking into a crystal ball, except instead of vague shapes, we see crippling debt and a tax system that makes you weep openly. Now, you might be thinking, Ram, isn't this a bit dramatic? And to that I say, is it dramatic if it's true? Buckle up, dear viewers, because we're about to dive headfirst into the economic abyss that awaits us. Think of this as a financial warning siren, blaring in the key of impending doom. Prepare for a wave of new taxes that will hit every sector. You will be punished for government mistakes. It's like the government's playing a real-life game of Monopoly, and you're the poor sap who landed on Boardwalk. GST is expected to skyrocket to 38%, impacting most purchases you do. You know that dream you had of buying a new SUV car? Yeah, kiss that goodbye. Rental income may also no longer be tax-free. Expect new levies soon. Remember that property you thought would provide passive income? Turns out, the government may love passive income too, mostly yours. Provident Fund plunder. Even partial withdrawals from your Provident Fund will be taxed in future regardless of the reason. Yes, even if you're using it to, build a house or close a loan. Long-term capital gains. Short-term pain. Long-term capital gains taxes are set to rise, affecting your investments. Anything government sees you earned big will attract much bigger taxes, because apparently, letting your money grow patiently is now a punishable offense. The people revolt. Widespread civil unrest is anticipated as people protest against the government on taxes and high inflation. Let's just say, those in power might want to invest in some really good earplugs. Market mayhem. The stock market in India, Time Machine predicts, will crash sooner. And if it doesn't, India will face a severe debt trap leading to depression. It's a lose-lose, really. We better pray for recession and lower government spending. The pink slip epidemic. Massive job layoffs are on the horizon in India across sectors, affecting millions. Remember that stable career you were promised? Yeah, about that. Interest rates climbing way higher after a year or two. Interest rates are expected to climb after a brief dip, making loans more expensive. Those who take loans in dip will be trapped in debt. So basically, everything you thought you could afford, think again. Drowning in debt. Many will find themselves ensnared in a web of debt. It's like a sticky spider web, but instead of catching flies, it catches your financial hopes and dreams. The stock market hangover. Investors who chose stocks over real estate will face significant regrets. Turns out, bricks and mortar might actually be worth more than digital numbers on a screen. Who knew? Recession or depression? Pick your poison. If a recession is avoided, a depression is almost certain. It's like choosing between getting punched in the face or kicked in the shins. You won't like both. The dollar debt disaster. Increasing dollar-denominated debt will put Indian banks at risk. Government will be promoting more and more dollar-denominated debt, creating huge risk for banking sector. As the rupee crashes, paying back will be pain on banks. It's like borrowing money from your very intimidating neighbor, except your neighbor is the US dollar. A global monetary reset is coming. India government is not prepared for it, but you can prepare. Outro: navigating the storm. To navigate these turbulent times, consider these solutions. Buy residential real estate in smaller cities. Invest in gold and silver. Clear non-mortgage loans. Withdraw PF above 20 lakhs. Invest passive money in lands and cheaper multiple plots. Switch to fixed plus floating interest rates when rates start climbing after dips. Buy sellable assets. Keep some cash at home and get comprehensive insurance. Now, I know what you're thinking. Ram, this sounds a bit extreme. But remember, friends, We're talking about a future where the economic ground beneath our feet could crumble. It's time to be proactive, to be prepared, and most importantly, to be financially savvy. Most importantly, exit the India stock market. Even if it grows slightly at the cost of debt burden, it will be high risk and low reward game. The era of stock investments in India is over, at least for now. Remember, in the game of economic survival, it's not about being right, it's about not being wrong. And blindly trusting a system teetering on the brink of collapse? Yeah, that's about as wrong as